Good evening. This is the Elliott wave update for the NASDAQ 100 for Sunday, February the 13th, 2022. Friday was an interesting day again. It was a good trading day. Lots of activity, and the market did end up dropping with a lot of volatility, and we got a lot of stuff going on. And a lot of it, of course, was expiration, and then the added features of what we got going on outside of the markets. And that's number one would be interest rates. Number two, we have a little bit of a standoff going on in the Ukraine. What does that really discuss and tell us about the market? So I want to do a little bit of an update today in terms of where we are, what that looks like if we put it in perspective to what I'm expecting, and what possibly could happen if we start to get an upside move. All right, so let's dive in. I continue in the NASDAQ to put the highs up here at 16,768. That was that high. And that's where I marked intermediate 5, primary 5, and cycle 5. So we're in a larger corrective phase, of which initially we dropped down in an ABC, and I marked it as wave A. Then we did an ABC up, which I marked as wave B, intermediate A, intermediate B. That suggests that we're in an intermediate C wave down. That C wave will consist of 5 waves of minor degree. And when we put it into perspective, that's the C wave should, number one, possibly be equal in length to this A wave. At a minimum, it should come in at 62% of that A wave, and that's 13,360. That would be the minimum that I'd be looking for within this C wave. Now, what inside we're still would be in this minor third wave. Within that minor third wave, and I'm on the 4-hour chart, so let me now go down to the hourly chart, see if I can open it up. We're going to take a look at inside this C wave. And that's actually too much. And so let me go back out to the 30, and let's open that up and see what it looks like a little bit better. Okay, so this is the top of what I've labeled as wave B. So we have 1, 2, and then it starts to subdivide. The larger third starts to subdivide. 1, 2, 3, 4. 1, 2, 3, blah, 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 still a 4. And we should get another 5 down. And that might just complete this minute inside third wave. And technically, I'm looking for a 5th wave to likely start to bring the market down below 14,000 again. And initially, I am hoping or thinking that we should try to get to 1.618. And that would put minor 3 at 1.618 times the length of minor 1. That's a very good area that I think it should come in, but it might come in higher. We already have a low at 37 or 30 at 3706. Is that where that low was? Go back out, and that would be over here. Yes, 13,706. So if we come down to the 1.618, that third wave would put us below the bottom of this intermediate A wave, and that would be a good sign for the C wave. Now, we're bouncing back and forth now as the buyers step back in, and they're kind of coming what we should be doing, and they're deciding maybe we'll buy because we should bounce, et cetera, et cetera. It is bouncing, but in my estimation, it's a small 4th wave. 4th wave has potential where it could get up to 14,345-ish, which is where the 8 is sitting. We have resistance at 62. I would not be looking for much more than that. In fact, we might still be held below 14,300. Right now, on Friday, we got up to 14,290. We opened today at 250, I think it was. But we sank real quick down to 184, which was nice. So we didn't quite exceed the low at 181. So it looks like we're just doing a little bit of a flat. Maybe we get back up to 290-ish, and then we drop again, break below that low at 84, and again at the low at 81, and start to head down in a fifth wave, a smaller fifth wave. And that would set us up to then bounce again in a minor fourth wave and then a minor fifth wave to finish the intermediate degree C wave. Then off of that low, I'd be looking for a more sustainable and larger rally in the way of a larger B wave. So what can also be going on, and then I'm going to go back out to that 4-hour chart. Here again, I'm going to open this up so I can see. And we have A, we're looking for B, but we kind of have a three-wave pattern down. Market is thinking it should rally from here. And if it really starts to pick up some steam and it ends up breaking back above, then about 14,541, we're calling, and it's really got to rally with some steam. Or actually, I could say 14,415. No, let's make that 14,363. Above that level, then I'm starting to think that, well, we might be leaving a three-wave pattern down. And if that's the case, that doesn't mean it's happening. It just starts to lean us in that direction. I would need to see it to break again back above 14,500 before I would leave three waves in place and then consider that we're going to start to rally again. But if that's the case, let me point out, this would just still be an ongoing B wave. So this would be an ABC for B, ABC for the internal, ABC for wave A of B, ABC for wave B of B, and then we're going to do 5 waves up to form wave C, still a B, and still have a crushing decline. That would be an alternate view right now, because the market would have to really put aside any interest rate worries and the potential for Russia to invade Ukraine. We have no resolution to that standoff right now. In fact, it's still a standoff. We still have our president meeting with the president of Russia. We still have the president of France meeting with the president of Russia. We still have the president of the US meeting with the president of the Ukraine. So we're still getting a lot of talk, trying to be diplomatic, trying to pull things apart, but at the same time, US notifying all the US residents US citizens who reside in the Ukraine that they should leave. That if a war begins, if an invasion begins, there's no way the US can step in and rescue. Because as the president said at the end of last week, that would be a world war. If we went in to do that, then we're involving ourselves in a world war. And that puts things in a whole different light. So we have a very tense situation there. And still, that I think will have an effect on what the market's going to do and what we should be looking at. Now, we are getting a little bit oversold, but in terms of this larger picture, let's keep in focus that if this indeed is the C wave down, the comparison move is to that A wave. The minimum move that I'd be looking for is 13,359, 360. That would be a minimum move for this C wave. The maximum move, we're looking way down. We're looking way down. The 100% where wave C would be equal to wave A comes in at 12,188. Those continue to be in play. We have some serious consequences facing the market. We don't have resolution of those consequences. We don't have a definitive number being put on what interest rates are going to go up in March. We still have additional figures that'll be coming out prior to that Fed meeting. We still have that rumor flying that they may call an emergency meeting of the Fed to start the process before that March meeting. So a lot of stuff still sits out there. So, but bouncing, sure. Nothing goes straight down. And so we can really expect to see both sides play out. And the volatility has increased. So I would suspect that we're going to have as much volatility to the upside as we have to the downside. That makes for great trading. So what can I say for tomorrow? Upside right now, I would be looking for it to be held below 14,365. Right, 363, excuse me, 360, 365. We start breaking up towards 83, still okay. And that would, I think, would still be just a small wave forward within this ongoing decline. And we'd be looking for that decline to continue. Once the decline starts to kick back in, I'm looking for a break below the support at 14,170, 14,084, 13,960 comes into play, 828 comes into play, 721 comes into play, but ultimately, I'd be looking for 13,616 to complete the minor third wave. Then we get that larger fourth wave bounce, and then a fifth wave down, and that's the one that I think will take us well below 13,706. For tomorrow, though, I think we can start to head down and get ourselves into this area, closer into this area. And we just need to start breaking below. If we break as hard as we did on Friday, tomorrow, then we're going to be down below 14,000 again. And then we're working on these lower levels. An upside move, it have to go against the grain. It has to go against, basically, in my opinion, it's going against the logic of why are they moving the markets as high as they would be and pushing as hard to the upside as they would have to. But hey, they could. And if that's the case, a move above 14,363 gives us a level up to 385. And that starts to push us towards this 14,500. Of course, we still have 14,435 as resistance. And then we have additional at 14,500 to 14,541. That is where the 4-hour 8 is sitting. So again, moving averages will guide the trade in either direction. Okay, I am going to leave it right there. Trade smart tomorrow. Use these moving averages. They continue to call the shots, in my opinion. They continue to tell us right now, 200, 50, 20, 8, 4. Lined up to go down. 200 is rolling, not pointing as sharply lower as that 50 and the 20 and the 8 and the 4. Right now, we're just bouncing off and up around the hourly 4. The hourly 8 sits at 344, the 20 at 482. So again, yes, we could get a decent rally going. I am not suspecting that that'll be the case, but we're getting a little extended here. So a pop up, not out of the question, but a market that is in a stronger down move, it can stay oversold for quite some time. Okay, next update will be tomorrow on Valentine's Day.